Joining us now is IBM Vice Chairman and former National Economic Council Director Gary Cohn. Just the man I wanted to talk to, Gary. So how do you read the numbers today? Too hot for comfort?
Sarah, I read the numbers as everything in the economy is starting to normalize. You know, we've been talking about, the recession. We've been talking about the hard landing. We've been talking about Fed increases. We've been talking about Fed decreases. I think what we're starting to see now is an economy that's acting a lot more predictable and not a lot more normal. The standard deviation of each of these numbers is starting to shrink. We're now talking in tenths of a point versus half of a percentage points. We're now talking about a Fed. Will they go this meeting? Will they wait a meeting? But even in that discussion, we're talking in 25 basis point terms. We're not talking in 75 basis point terms. We're not talking about when is the Fed going to stop raising rates and start cutting rates, which was the discussion we were having a year ago. We were having a discussion as, oh my God, we're raising rates now, but we're going to be turning around very quickly and we're going to be lowering rates. I think we're getting back to what I would consider a normal economy. Everyone wants to characterize it with some phrase. They want to talk about where it is in the cycle. They want to talk about, is it a landing? Is it higher for longer? Is it just longer? Is it just higher? I think we should think about it as normal for a while.
But it isn't normal yet, Gary. I mean, core inflation is at still 4.1%, which is coming down year over year, but double where the Fed wants it to be.
Well, we were at zero inflation for how many years? That was normal for that period of time. This idea that the Fed...
But we're in the middle still of this inflation fight. Or maybe at the end.
No,
I don't know.
We are in the middle of this inflation fight. But the idea that the Fed can put their finger on a scale and take the scale to exactly 2% inflation, we know they can't do that. We saw it at the other end of the spectrum. They did everything they possibly could to try and get us to 2% inflation. We went to zero interest rate policies. We went to quantitative easing. We had the Federal Reserve building this enormous balance sheet. It had no effect on getting us to 2%. Now we've got the Fed trying to do the opposite. We've got them selling bonds. We've got them selling securities. We've got them raising interest rates, trying to get us to 2%. Are we naturally moving closer? Yes, we're naturally moving closer because the economy is more naturalizing. All of the stimulus that was thrown at this economy during the pandemic is starting to or has come out. The spending at the federal level is still not stopped. We still have enormous fiscal stimulus in the system. It's in fact why we don't have a budget, why we're operating under a 45-day, it's no longer 45-day continuing resolution, because we can't agree on what baseline spending should be in this country. But we know this. We know that going into an election year, the federal government is going to continue to spend. We saw it in the Thursday numbers day. We saw it in the continuing claims. We are not seeing a major effect in unemployment. If the Fed raising rates was really having a dramatic effect on inflation, you would see it right there. It would show up on job destruction. We are not seeing job destruction, and we're not seeing wage destruction.